What is going on, ladies and gentlemen? You've probably heard me say one setup for life before, and you probably don't know what that means. So I'm going to be making another video going over this. It happened today, and you're probably like, dude, Dodgy, why are you going over setup just because it happened today? Okay, it's because this does not happen too much, and today was just textbook. So when it does happen, it's a very high probability. And yeah, I'm going to be basically explaining what that is. And then the other thing is, if you want to buy an Apex account to maybe practice in the future, there's a 71% off sale. Again, just it's a prop firm. They give you 50K, 100K to play with. It literally only costs like $30. Just use code Dodgy in the Apex link in the description below. And then if you want to watch my live streams every day, click the WAP link in the description below. I'm currently running a 50% off if you want to watch my live streams every day. I literally live trade every day. Today I actually went 6 for 6 on trading a funded account. So yeah, I posted the video on the Twitter if you want to see all my executions. But yeah, without further ado, let's get into the video. So my one setup for life involves a very key thing, and it mostly works with 8:30 news. I will only usually use this with 8:30 news. I'm not gonna go any other. I'm not gonna say I use this with 10 o'clock news because I probably never have. And the only other time you could potentially use this is with the FOMC news or when JPOW speaks. But typically it's the 8:30 news. So when the 8:30 red folder news comes out, it has to be red folder. Okay, and if you want to figure out if it's red folder or not, you just go to my Forex Factory, okay, on Google. Let me put this in without spelling it wrong. So you go to the site, you basically see if it's red folder, it says it's red folder. So today we had 8:30 unemployment claims, and this is a good one to use. 8:30 red folder news, all right? And again, it's just forexfactory.com. So what I look for, the 8:30 1-minute candle has to have some sort of abnormal wick on either side. And by abnormal, it has to be like a big wick. Okay. So what I'm ideally looking for price to do is I'm looking for either a wick on one side and for us to trade away from it. Okay. And that's what you want. And then that's when I'll look for a reversal later, then go back up. Now, does this have to be a big wick at the bottom? No. We could just have an abnormal wick at the top, and then you still do not want price hitting this wick. You want it to us to trade away, and then that's when you look for the setup later. Okay, same thing to the opposing side. If we get like a big wick below, and let's say we take out the highs first, we're looking for those highs to be taken out, and then we're looking for a later setup to go back down to this data low. And you're probably wondering, why does this actually work so much? Why is this such a good liquidity pool? And keep in mind, this is probably one of my favorite. This is my second favorite liquidity pool to target after equal highs and equal lows. The reason why this is so good is because there's like leftover orders that do not get filled in here. Like there's literally 0 on the bid and 0 on the ask, meaning nothing was filled on here. And because of that, that's inefficient. So the market wants to come down and rebalance and fill those orders back up. So that's why this works so well. And it's my one setup for life because whenever I see it, I always take it, and it gives you a really good draw on liquidity, gives you a really good bias. Okay, whenever you see this, even if you miss the entry, you still know the bias, and it's a great thing to know the bias. Okay, because it actually feels like you know what you're doing. So today, okay, what happened? Well, here is the 8:30 candle right here. Okay, 8:30 candle was right here. Okay, it was a 1-minute candle. And you can see it was at 8:30. Here's your abnormal wick. Okay, see how this is like, you see how if you like back away from a screen, this is really like, it's just abnormal. Okay, it's something you can easily see. All right, and again, this to me is, okay, I don't know we're going to go back to these data lows here. Do you see any framework to short here? Absolutely not. The first sign of bullish or bearish order flow I see here, the first sign is this. But does this ever violate the fair value gap? Nope. Okay. And when you're using this setup, you want it to be a singular fair value gap. You want it to be a singular obvious fair value gap. So that was the first sign. However, we do not violate that. So was order flow bearish? Nope. It was still bullish here. Okay. There's no short setup. There's no market structure shift. And then here we finally get our first violation of here, and we violate this one too. We violate both of these. And I do not particularly like this one because I don't like to use when there's two bearish or bullish fair value gaps in the same leg. Now, if you go to the 2-minute, you can see, well, what happens? It turns into a singular one. So this is your one setup for life. The one setup for life being that you're shorting when this is closed or pulled back to. It doesn't matter. Okay, so let's just say you're shorting when it pulled back to. Okay, And see how I went from the 1 minute time frame to the 2 minute? The problem with the 1 minute here is there's 2 fair value gaps. And the reason why I do that is because, again, the way I teach a stop loss for an iFVG is a close back above. And in this situation, we have 2. So if I were to short because of this was closed below, the stop loss would technically be the close back above. But in this case, that wouldn't be true because technically we still have another one above it. So what if we close above this one and not close above this one? Well, the trade would still be valid. So what I do is just to make it easier, I go in the 2 and then I wait for the 1 on the whatever time frame has a singular one. On the 3 minute, it did have 1 as well. Okay, so you could have used a 2 or 3 here. And then I wait. So I short when we close below. You can wait for a pullback. It doesn't matter. So this is the first option. You can market sell here, or you can wait for a pullback into the iFVG here. And then I personally put my stop loss as a close above this fair value gap. So if the market comes up, closes back above, I'm getting out. That does not have to happen. You can put your stop loss at the high. It's up to you. Okay, this is all subjective. It's up to you whether you want to do the stop loss how I do it, which is a little more aggressive, or a stop loss above the high. So that was kind of the first sign of the one setup for life I saw. Okay, I did not take that one. Okay, I'll show you a more obvious one, and you'll see why it's more obvious in a second. So that was the first sign. This was your play. But to me, I think the best one here was this one. Okay, and you're gonna see this, like, this pops out at you so much easier than this one. This, to me, like, this signature and price does not really pop out to me that much. I don't know how to explain it, but this was the 930 open. That's our Judas swing. We barely displaced above this high. See how in this situation, see how we're not really getting any sweep of anything? I mean, we already swept liquidity way down here, but there's not really any like internal sweep here. So this internal liquidity sweep, and if you don't know what internal liquidity means, it just means liquidity inside the range. And this is inside the range. This would be outside the range. This internal liquidity sweep combined with an iFVG and data lows just makes this my setup that I like to take. You could have taken this one, but I prefer this one. And again, how I would have done it is, again, if you're an RR trader, what you want to do is, this would be your risk to reward. Okay, it would be about a 1.69 without waiting for a pullback. And if you wait for a pullback, you could probably get at least a 2. I mean, it's up to you, but you could get like a 2 of the pullback. So this is the play itself. Now, if you trade inversions how I do, you know I put myself to break even when we hit this low. Okay, that is not necessary for this setup. This setup is profitable as it is without doing break even or anything. So like today, I did not think price action was going to be good. So what I ended up doing was I shorted this candle when we closed below, and I put my first take, and this was about a 15 or 10 point move, and I put my take profit here, and then I put stop rest at break even. And what happened? I got stop the rest at break even, which is okay. But what did I do? I kept re-entering because I still knew the draw at that point. And this is why this setup is so good. Because I know as long as this iFVG is being respected, I still know the draw on liquidity is probably to the lows. So even though I got stopped out of break even, half my position, I'm still allowed to re-enter another iFVG and get into these data lows. Okay, and the only other iFVG I didn't like here was this one. And it was simply because we didn't sweep liquidity here. Okay. I would have liked it better if we swept this high, but we did not sweep liquidity here, so I did not like this one. But yeah, you can just see, like, this is how you play the setup. Okay, the play in itself would have been this if you're an RR trader, and again, you would have just let it play out. And I'm assuming most RR traders will put their stop above the high here. But like I said, to be a little more aggressive, I'll put it as a close above the high because it saves me more than not. And then the other thing for why this is bearish is because on the higher time frame, we were inside of a 4-hour fair value gap. Okay, see that? So really big displacement to the lows on the 4-hour. We have a big market structure shift here. Okay. And the fact that we're inside of a higher time frame PD array makes this textbook as well. Again, it's up to you if you wanted to take this 2-minute iFVG or this one. This is just more high confidence to me because here's your move that's opposite to open. Right? This is a Judas swing. This is what ICT teaches. And then we cut through that. All your longs get wrecked. And then this reverses and we go to data lows, which I already explained was a very good liquidity pool. So see how you're not, when you go for this one setup for life, you do not want to see these hit. You do not want to see that wick taken out. You want to see us trade the opposite way and then get framework. This is your framework to go to these data lows. Okay. So that, my friends, is the one setter for life. Again, some people are going to get stopped at a break even and re-enter like me. Some people are going to hold this because they know it's a good RR trade. Okay, at the end of the day, it's up to how you trade. So that is my one setter for life. This is part 2. I've already made another video on this in the past, so I'd recommend going watching that. And yeah, other than that, hope you guys enjoy this video. Let me know if you have any questions, and yeah, peace out.